13. On May the 1st of year 1, Carter Advertising Company received $4,680 from Caitlin Brianna for advertising services to be completed April 30th of the following year. Cash receipt was recorded as unearned fees. Assume no entry was made for unearned fees during year 2. The adjusting entry for the year ended December 31st, year 2 would include what? This is a pretty complicated problem, or at least the wording makes it such. So let's see what we know so far. Here's our accounting equation. And on May the 1st of year 1, we took in money of $4,680 for advertising services that we haven't done anything to earn as of yet. So here's what that looks like. We debited cash $4,680 and we credited unearned revenue for $4,680. Now that was on May the 1st of year 1. Now it says the cash receipt was recorded as unearned fees, which we just did. Assume no entry was made for unearned fees during year 2. So let's see what we got here. This is for a 1-year contract because it says that we took this money in for advertising to be completed on April 30th of the following year, and we took it on May the 1st. So that's 1 full year. So at $4,680 divided by 12, that means every month we're earning of that unearned revenue. We're earning $390 every month. Very important to understand that. So at the end of year 1, here's what we've got. If we took the money in on May the 1st, then we're supposed to make an adjusting entry covering May, June, July, August, September, October, November, December, or we're covering 8 months of the current year, year 1, that we have earned, or we have earned a total of 8 months times 390 or 3120 of this 4680. That's how much we've earned for the first year. So let's make that adjusting entry. So we're going to do the following. We're going to debit unearned revenue, which is liability, and we're going to credit earned revenue for 3120. And we're making this entry as of the end of year 1. Now, the problem says, assume no entry was made for unearned fees during year 2. Well, that's fine. And what they want to know is the adjusting entry for year end December 31st, year 2. So, like I said, every single month that goes by, we're earning $390 of this money, and it should be going out of here and into the earned revenues. But it says we don't make any adjusting entries, so we will have to wait until the end of year 2. And at the end of year 2, here's what we've got. We've only got 4 months left. That is, when we earned all of this over here at the end of December, we have January, February, March, and April. Because notice, these services were completed as of April 30th, which is the 4th month. So we earned, in the year 2, we only earned 4 months times 390 or 1560. So whether we do it month by month or whether we do it and wait until the end of year 2 and make this entry, this is the entry we're supposed to make, and this is the adjusting entry. So we're going to remove the remaining amount out of here, out of this liability, and into revenue one time at the end of December 31st, year 2, and the entry is going to be for 1560. So we're going to take 1560 out and move it into revenue, and that's the adjusting that we're going to make, and that's what we're looking for right there.